All righty. So we're pushing right ahead. We're into week 5. So we're starting to talk about some other things. Tonight we'll talk a little bit more about credit. So we hadn't talked too much about this before. Um, I have kind of a different approach than maybe some people in terms of personal finance. A lot of times people, want to jump into personal finance because they've created a bit of a mess and they want to, un sort things out and get disciplined and all that. If you do that, maybe you would probably be quite restrictive with credit because you got yourself probably into trouble with it before. But if you're starting with a clean slate, if you're a young person or becoming a college graduate, a young professional, you need to learn how to use credit early so that you can, maximize it, not maximize the amount of credit you take on, but your financial ability. Because without credit, I couldn't imagine if, some people don't even have credit cards at all. That'd make life exceedingly difficult and, unfortunately quite a bit more expensive because credit can help you, but you've got to be able to control it. And so, if you can't, I I mean, at least in most cases, quite drastic would be to cut yourself off from credit and, cut off your credit cards and do all that stuff. If you have to, you have to. But a much better alternative would be able to use credit and, you know, um, use it wisely and, maximize the benefits of it. Again, there's two people in life. There's the people who pay interest and the people who earn interest. I'm not trying to tell you to be one of the people who is works as a slave for the people who earn interest. But if you're investing in assets that appreciate more than what they're being charged for credit, or if you're the person who just can use credit without paying interest, like you can do easily with a credit card if you're disciplined about it, then it'll make things better. So anyway, credit funds provided by a creditor, somebody who's got the money, to somebody who's the borrower. The overriding thing with credit that you'll find throughout your life is when you really need money through credit, nobody wants to loan it to you. But when you got tons of money and you're, you know, doing well, everybody wants to loan you money then when you don't need it or you don't want it because it comes with a higher interest rate or an interest rate that you'd rather self-finance or do things otherwise. I mean, I get loan applications all the time, and if I'm buying a piece of equipment or something, most of the time I don't take those loans because they're at rates that are, say, 8-9%. My investments, the equipment I'm using is not going to have that payback rate, or if it does, I'm going to have to work it pretty hard. So anyway, types of credit. Um, uh, the what makes credit expensive or cheap? And if you think about credit, basically you're renting money. You know, sometimes you can rent it for quite inexpensive. Sometimes you can, it's quite pricey. And so it's sort of like renting a car. Sometimes it makes sense, and other times it's too expensive and you might lay off. I was on a trip and I knew I was coming back to a car because of the situation. I left a car that I knew had a known kind of a weak battery. And anyway, I just wasn't going to deal with it when I got home. I was just going to rent a car because you can get cars midwinter. Granted, the rental cars without snow tires or anything, but you get them for 15, $20 a day at the airport for, relatively new car. Well, a new rental car. But if you try and do that in the summer, you're paying in the hundreds. So, it depends on the situation. Sometimes you can get interest rates down below 3%, which we were in that environment a few years ago. And now that things are, you know, 7%, it's harder to justify. So anyway, but what makes credit, when in like today's environment, when interest rates are what they are, you can still get reasonably inexpensive credit, and I guess 6% is reasonably inexpensive, but that's for something like a home where there's collateral associated with it, and that gets into this business of security. security is the collateral. If you decide to, not pay your mortgage, they're going to foreclose on it. They've got collateral, so they're in a pretty comfortable position. Same with vehicles. Vehicle interest typically isn't that high because the ability for repo man to come out to your car or out to your house and take that car back is that's pretty well established legally. You signed the contract and all that, and so you end up with um, lower rates because it's secured. Conversely, if you have something like a credit card and you run down to Walmart or Target or whatever and buy a bunch of junk, it's not like the credit card company can easily come back and, you know, repossess the pillows or whatever you bought at the store. They can't. Personal clothes and things like that, the depreciation on that, that's just not going to happen. So the interest rates on credit cards will typically be higher because they're unsecured. They can come after you, they can come after your finances and stuff, but it's just a little more difficult. So, um, anyway, so we have these two different categories. We have non installment credit, which is like a credit card where you can pay it off every month or you can pay, whatever amount. But installment credit, typically something like a car loan, a house loan, mortgage, where there's a set amount. It stays the same. And there's an item identified typically under it and goes for a certain term and then the loan's over and your loan with that company is done. So but anyway, you want security. You want the more comfortable the lender is, the cheaper the interest rate. If the lender's sticking in, feels like he's extending himself, knowing that you have bad credit, a bad credit score, it's going to be painful. It's going to be very expensive to you because that lender's nervous. Whereas if you have good credit and there's some sort of asset that's being pledged as collateral, then the interest rate will typically be much more, uh, you know, normalized. You can also have lines of credit, maybe, open-end credit. Um, Sometimes that's more common in a business type situation. But advantages of using credit. Well, if you go, let's say you go in this scenario again, you just got off a flight, you want to go rent a car, and you don't have a credit card, first off, they're going to look at you like, ooh, what's going on here? Do you have a bankruptcy? Most, what they consider normal folks have a credit card. So they're kind of sizing you up. They want that credit card for renting a hotel, renting a car, renting whatever, because, they're going to put maybe $400 or something seems to be the normal amount that um, they won't charge it against your card, but they'll essentially, stack those charges out there as pending, and they won't go final. They'll be reversed when you return the car. But anyway, if you don't have a credit card or you just have a debit card, um, yeah, and then you're going to be doing things day of. If you walk up to the counter in midsummer and try to get a rental car and you had no reservation beforehand, you're normally going to get ripped off a bit in the summer, but you're really going to get ripped off when you just walk up to the counter without a reservation. In order to typically have a reservation for a hotel, credit card, airline, whatever, you need to have a credit card. So can help you build credit, which is typically a good thing, but just having credit for the sake of it, you still want to be disciplined and judicious and use credit when necessary. And then also now, it used to be the person with a credit card delayed the line. Now do you go to a convenience store and the person that can just walk up there and tap their card or do, Apple Pay or I guess it's Google Pay, whatever, where you're just using your phone. It is far, far quicker. And also when we get back into budgeting, there's a record of that transaction, you know. So that's nice. All right. So disadvantages. It's quite obvious. Yeah. People will tend to overspend. And I've seen it a million times myself. Especially I used to, I don't so much take credit cards in any of my lines of business right now, but when I did, Um, I didn't want to take them because I have to pay that 3% charge. I really didn't want to take American Express because then it's like a 4% charge that the vendor gets. You that's why if you go to a store sometimes and you buy something, say it's for $100, that merchant only gets about 97. So, and it's a couple days delay. They prefer to have the cash. So I'm the same way when I'm selling something. But if it's a flexible kind of purchase and I know the person is going to buy a whole lot more stuff if I'll let them use a credit card, then I'll definitely take the credit card and I'll just, eat that small fee. There's a perception, people will do not like to, you know, give out money, especially that's going to put themselves into debt. Sometimes it's fun to pay in cash, but typically I don't pay in cash if I can use the credit card. But anyway, it depends. Also, if you're going to be using your credit card, sometimes you know, a lot of us have maybe Alaska Airlines or whatever it is now, Atmos or something, where you're getting miles. For me, I've switched it to a crypto one, which crypto's a little rough this week. But anyway, I get 4% back on that, um, which is nice. So anyway, um, but yeah, the psychological disconnect between credit and money. People don't understand. They'll think, oh, I'm going to buy this thing because it's on sale. Well, it's only on sale if you're going to pay off that credit card. If you're going to let that credit card roll for a few months before you pay down the balance, it's probably going to be more expensive uh, than what you thought. You know, most people don't understand how compound interest builds and makes a purchase more expensive, but the creditors do. They definitely understand, and especially credit card companies, they know late fees and late charges and all that other stuff. If they've got somebody, they don't want people to flake out. They don't want people to default on the credit card. But if you want to make the minimum balance, you want to pay late, you want to incur a ton of charges, that's where they make their real money. So, and large accumulation of debt. It can't get away from you. Needs and wants. Things, go from being a need or from a want and become all of a sudden a need because you've got that credit. If you didn't have the money, if you didn't have a credit card, you probably wouldn't have done it. So anyway, um, impact of credit card payments on savings. Sure, if you're mired in credit card debt, you're gonna have to service that debt, payments on credit. So, but again, there's no absolutes. Just be smart with credit purchases. Credit history. How do you build credit history? Usually, it does start with maybe a cell phone bill, something like that, utility bills. Um, Keeping things up in a timely manner, certainly. This credit insurance, it's kind of it's a funny thing. You'll see, I wouldn't say it's a scam, but these merchants or banks or whoever the lenders are, like often on a mortgage contract now, they'll tout the benefits that they're establishing a life insurance policy in your name that will cover the mortgage upon your death. And this is just a great thing. Well, it's good, but you're paying for it. That the costs of that insurance policy are built into the mortgage cost. And it's great for the lender because in the event of your death, they don't have to worry about, you know, a grieving spouse or dealing with any of the mess. They know that the note's going to be paid off upon your death, and so it just makes things much easier for them. But yeah, they'll often advertise it that, oh, we're giving you free insurance. There's nothing free. Credit bureaus. So credit bureaus, they're just part of American life. There's three primary ones out there. They've been established for quite some time. Equifax, Experian, and TransUnion. These people they can kind of run your life. They're independent, and they'll each one's got can establish your credit score independently. They call it a FICO score, which is actually kind of funny. That's actually refers to the partners in the company in Montana who started the thing. But anyway, that's another term you'll hear is FICO score, but it's just refers to these guys out of out of Montana who started this stuff back in the 50s. But anyway, it's recognized by all uh, the credit bureaus. They use that to establish things. So when they say somebody's got a good credit score, they're talking about a FICO score, and they're talking about a score. Well, if you're good, maybe up in the 800s, but that's probably unrealistic. But as long as it's not, well, we'll look at the scores, but you want a decent score because banks, lenders offer different interest rates to, um, that correspond to the credit score, which goes along with what I'm saying. If you have a high credit score, you represent less risk to the lender, therefore they can give you a lower rate. If you've got poor credit and financial problems, well, guess what? You're going to have even more financial problems because the only loans they're going to give you are high interest rates. Free credit reports available annually. But there's three of these guys and they're all independent. So you could get one from each one if you wanted. So you get them up to 3 times a year. Also, if somebody says, no, you're not approved for that loan, well, you have the right to ask why, which means I need another credit report. Especially if you don't think you've got any credit issues, getting another credit report and finding out what they say about you is kind of useful. Um, so anyway, yeah, the thing about this credit report, they've got the top banner and stuff, but because credit report, if in terms of an identity thief, if they got a hold of your credit report, it's got everything on it. It's got your all your information, your social, your address, your everything. They could pass whatever check they needed to in terms of verifying or establishing, uh, a false identity in your name if they had access to that. So when you go to get your free credit report, they're going to ask you all kinds of questions trying to make sure you are who you say you are. Well, I can tell you that most of their information, at least in my case, is bogus. I've got an ex-wife, only one, but I've got to kind of know where her addresses are. I mean, long since I got divorced, I guess 2008, 2011, anyway, a long time ago. And anyway, it's still tracking like we're still an item or something. It's just weird. So anyway, it for me it calls into question the accuracy of all their information when they don't even know my basic details. Anyway, um, birth date, social security. So they're going to be able to identify you, hopefully. Um, and what you're looking on a credit report is you're looking for basically hoping an absence of data. It doesn't say anything like, oh, this person's got great credit, nor does it even have that credit score. That credit score is proprietary. They want to sell it to you, or maybe you can get it from somebody like Credit Karma or somebody who has paid for it on, you know, to try and drag you in as a customer. Credit Karma may want you. Credit Karma is just an app and a company out there that um, will give you your credit score for free. In turn, they're going to sell all your data, um, to all the mortgage people who are looking for new clients. So they're not going to give away your too much of your personal information, but don't be surprised if you go on Credit Karma and then all of a sudden you notice an uptick in the amount of credit card applications you get in the mail, etc. So anyway, so what you're looking for is negative information about you. Now, a smart person who's like the person who might be approving your credit card, if they just see a big void in there, no information, then that's very suspicious because now they're thinking you must have had a bankruptcy and you got all that data wiped. Um, so no information is also bad. What they want to see is you want to see whatever accounts you have and it basically say in good standing or certainly nothing delinquent or late. And anyway, if there are errors in there, then you need to fix them. For me, also, it's kind of good. I like to kind of clean house. I like to go in there and make sure that I don't have any open credit cards or anything else. My credit's good enough where I'm not trying to build credit. They do, and I verified this even on the credit, um, on their sites, the credit bureaus. They consider if you've got an account, pardon me, account that's open but uh, not used, that's got low activity on it. They see that as a positive thing that you have the ability to get credit if you need it, but you don't have it maxed out. If you have a bunch of maxed out credit cards, obviously that's going to make them quite nervous. And there's, it's proprietary information, the way the credit cards derive your score. They, don't often share that, but I can tell you, for example, if you let's say you're looking for vehicles and you go to, the Ford, Chevy, and whatever GMC dealer, you're looking for a truck. If you go in there and the sales manager always wants you to have, let's just talk to the finance person and you give them your details and they run your credit. If you do that through the course of the day, let's say you talk to three dealers, your credit score will go down because you represent somebody who's trying to get loans at multiple places. So if you do it three times, they think, wow, this person's trying to get three loans, not knowing that, you know, th- they might recognize that you're probably only going to get one, but they still assume that you're going to get a bunch. I was shopping for a loan for a piece of equipment. And so I was looking at what my options were, and I looked at three or four different finance type things online to see what kind of interest rates I could get. And the next week, I got a call from my mortgage company, and I wasn't changing any of the details of the mortgage, but I got a call from them asking me if I was having trouble with my mortgage and whether I needed a loan or what was going on. And I said, no, what are you talking about? And they said, well, we just noticed you've been applying for credit at several places, and we thought maybe there was some sort of financial hardship going on. So, I mean, these people get nervous when when you owe them a lot of money and you're looking like you're engaged in what they consider sketchy behavior. It calls attention. So, anyway, yeah, if you're starting to get stuff turned over to collection agencies, yeah, your credit score is going to be very bad. This is like dog the bounty hunter stuff. The way collection agencies work, say you owe whatever credit card company 15,000 bucks, and they've been trying to get the money out of you, and you're just not paying. Well, depends on the company, but for the most part, what they'll do is they'll say, okay, the chance of recovering this money now is getting slimmer, and we would rather just not write off this debt. They're still going to come after you, but they're not going to spend any more time on it themselves. So let's say you own 15,000 bucks. Um, they might say, okay, we'll auction off this thing. They'll talk to one of these bill collector agencies, and they'll sell that debt, the 15,000 you owe the credit card company. They'll say, you know, tell the credit um, the collection agency that they're still entitled to that whole 15 grand, and we'll sell you that for 5 grand. So that's how the collection agencies work. They buy this distressed credit for whatever, say 1/3 off or pennies on the dollar, however they do it, for a greatly reduced rate. And then their business model is to come after you hard, collect that money, and then for their trouble, they get to keep, that extra money. If they can get the whole 15 grand out of you and they only had to spend 5,000 plus their time to get it out of you, that's how they work. And so it can be quite profitable for those people. So collection agencies can be pretty aggressive. Um, okay, so they're going to show open and closed accounts, and literally they just live on accounts you closed. It'll still say, as long as it's no bad information, that's what you're looking for. But yeah, your credit report can get quite lengthy after a length of time. Then also the list of companies that have requested your credit report. So normally there's, oh, I don't know, typically on mine, there's 8 to 10 companies in there, and they're typically the credit card companies or maybe some of these business lenders. And it typically corresponds with the junk mail I've been getting. Before one of these lenders offers you a credit card, or at least a good credit card, they're going to run your credit, uh, and they're going to figure out, you know, where you're at, and then that's going to correspond to whether they offer you a credit card and what rate they offer it to you. And then, like I say, the FICO score, the credit score, is not in that free report. They're forced by the government to provide those, report once a year, but they're not forced to do the free report. And now you got to be very careful when you go online to get your free credit report, because there's a ton of other bogus sites that offer the free credit report, but really, and they'll say, oh, we're giving you the credit score. Well, it's some sort of subscription service with maybe a free trial or something like that. But most of those end up with some sort of commitment. If you've got to give your credit card, or you've got to sign up for something that you can cancel free within 30 days, but they're banking on the fact that you're probably going to forget to cancel, and they've got a customer. So here's a sample credit report. So obviously all the identifying information. Yeah, if you file the bankruptcy, you should know about that. Collection agencies. I had some identity theft one time, and I got it all cleared up. Everything's fine. And then years later, all of a sudden, this debt shows up. They didn't send me any more mail, but they put it on my credit report. And I had to get that wiped off. It's just a clerical thing. But if you see errors, you need to put them on notice, and they've got to take that information down. And you've got 30 days to prove that it's illegitimate. And if that doesn't happen, then it reposts back to your credit report. Here's the things. I've never seen balances listed on mine. Usually they don't have that much information. And also these names sometimes are kind of strange. If you do business with Gap, Old Navy, Banana Republic, whatever that group of stores are, it will show up as, some Midwestern bank. You're like, I don't have an account with that. And then you'll realize, oh, they're the ones who do the credit card for those people. I haven't had a credit card with those guys in a long time, but I just remember being very confused by that. Inquiries, certainly. Just look for anything unusual. Um, but yeah, you don't want any late payments showing up. These should all be zeros. Again, if you're just late with a credit card, you've got to be late for a substantial amount of time where they're getting ready to send a collection. A late fee here or there is not typically going to make it on your credit card credit report. So that credit score, numerical rating, yep, they decide, and what interest rate is going to be offered to you. So they're supposed to, have similar methodologies, but um, they're private companies and independent. So you could have different credit scores by different bureaus. This is what they say makes it up. Um, your currency of payments, how much you use the card, history, that new credit. If you're out trying to get a bunch of new credit, you're going to make them nervous. Different types of credit. So if you're concerned about this, you can do more research to see what sort of metrics they're looking for. But it's sort of like, you guys probably don't get involved in this, but if you transfer certain amounts of cash with banks, if you walk into a bank with, you know, 20 grand and you deposit it, they're probably going to file a little report, and they're not going to tell you if they're going to file a report. In fact, they won't even tell you the amount that triggers the report. but just the same, they file a suspicious activity kind of report. And my previous job, I had a, well, I guess I still have the security clearance, but not like I did. I mean, I had quite a high clearance, and so I'd have to go in for a periodic reinvestigation. And sure enough, they're like, okay, on such and such a day, you brought in this level of cash. What was going on here? I'm like, well, I barely even remembered it. But yeah, that flag that got put in my permanent record, so to speak. So I don't do that anymore. You show up a couple different days. I think their limits were probably around 6 grand in cash. They triggers a report, but who knows? They won't share those numbers with you because anyway, they're pretty suspicious. Different scores amongst bureaus. Yep. So these are the numbers, 350 to 850. So if you're down on 350, you're down on the, you're a bottom feeder, subterranean. Yeah, don't don't bother. Nobody's going to give you anything. 600 probably good enough. And again, be careful what you ask for. I mean, having a good credit score is great, but being maxed out in credit for depreciating assets is very, very bad. So this is what I was talking about, correcting mistakes. Um, Improving your credit score. Yeah, this is interesting. Destroy credit cards and keep accounts open. And I have looked into this, and it is true. My concern is the identity theft. I don't want an account out there that I'm not checking the statements once in a while. I Another story. I ended up paying some lady's cable in Florida because somehow she had entered in the wrong account number. Just curiously got my account number, and the bank just said giddy up and started billing my account. I Anyway, I got to the bottom of it, but it was an account I didn't use. It was actually a stupid savings account that got overdrawn because of this lady paying her cable. And so they just started debiting my checking account because the savings account it was completely convoluted, but the security measures from the bank completely broke down and they ended up having to refund all that money, which it was totally their fault. But if I wouldn't have said anything, if I wouldn't have seen it, yeah, years later I would have been on the hook for it. So if you can't make the bills, communication is key with these people. If you call them, you're in much better shape. If you think, oh, I'll just keep a low profile, I don't want to talk to them. This whole thing stresses me out. Now that will not work. Or if you hire somebody else to, one of these companies says, oh, we can get you out of your credit card bills. No, no. You just added another bill for whatever the service is you just went with. And also you've highlighted yourself to the credit card companies that you're somebody who's fixing to default and they're going to get quite serious, they're they're going to go from being friendly to you to very adversarial very quickly. Review your credit report at least twice a year. Make sure it's accurate. Yep, look at the information. So it's maybe a lot to look at the first time, and it's not that much. I mean, part of the exercise here. Now, again, do not send me this credit card thing, but part of the assignment is to try to pull your credit report. Again, I don't want to see it. I don't want a copy of it. It's the honor system. You're going to go on to one of these bureaus and try and pull your credit, and not one of these bureaus. You're going to go through the site that I'll direct you to, and I'll show you the details and take a look at it, and it'll do far more than I can explain. These are how the scores kind of break down. So yeah, you're in pretty high category, but again, um, these people are going to be getting about the same rate, and people who are up in this 800, they're typically not people who are reliant upon consumer loans. They usually are doing quite well and they can, use their own nest egg. Um, so this is the site, this ftc.gov. Um, We'll just step out of the lecture for a second if it'll let me. I think this should work. But I'm gonna do control click. See if this thing works. All righty. We'll come back to it. Um, but what I'm saying is this .gov website will keep you out of kind of the Google hell you'll get into if you just say free credit report, you're going to get a bunch of garbage. So I'll show you that as well. I'm not endorsing Credit Karma, but they are, and some of the banks and some of the credit card companies that maybe you already have a relationship with will offer the credit score to you as a service, as a member benefit. Essentially, they're paying for it already and they're offering it to you. They're paying for it in bulk. If you go on there and try and get your individual credit report, they're going to charge you a little bit. If you want to get a home loan, for example, you have to pay a $50, it's probably 75 by now, to have your credit run, but that's not that difficult. Identity theft, thief, well, yeah, identity theft. Huge, huge problem. Now things have changed a lot in terms of how it happens. It used to be, um, you know, a lot of paper and shredding and too much information on documents. Now most of us have gone paperless, but it just means that we've gotten a problem from an identity theft standpoint. It's kind of made it worse because now people don't necessarily need physical access to anything, and they don't even need access to this country. They can be someplace else and work this whole thing out. So the numbers are pretty astounding. Trying to get the thing squared away. Wells Fargo is, I would just flat say, probably the worst bank I've ever dealt with. And try and deal with Wells Fargo when you don't have an account with them, but they think you do. I mean, I went round and round. Somebody, identity thief, had established a Wells Fargo account in my name. And so I'm calling Wells Fargo and they said, well, sir, we need your account number. I'm like, I don't know the account number. I didn't establish the account. Well, sir, but in order, I'm just like, okay. I literally had to drive down there in person. And anyway, it was just a complete waste of a day. So anyway, yeah, all these problems, I guess that's how I felt. Turned down for credit. I never let it get that bad. Um, I bought that thing pretty aggressively. It was their fault. The way I found out about it is I'm driving down the road and I got a text message saying that my transfer from my credit card, my Wells Fargo credit card to my Wells Fargo checking account had been denied. And I knew I didn't have either of those accounts with him. The guy was using my phone number, but he'd done a lot of stuff. But anyway, I didn't have, well, he didn't put two-factor authentication on it. So the only text I got was when he screwed up and tried to get a little too aggressive and they denied it. And so it unraveled. But the guy was in Oklahoma, completely out of state. He had done a lot of crimes, but I ended up with his address because he was having the statements sent to his house. It was sketchy, sketchy stuff. But anyway, um, 600 hours. I don't think I did that, but these are some of the tactics: phishing, smish. We're kind of familiar with this stuff. All the bogus emails. Your Amazon account. Oh, usually have some sort of urgency to it. Oh, you need to do this. Oh, use this fake, URL. And the best thing is just delete whatever you got and then independently call a number that you've already got established with them, off the back of the card, not a number they provide you and not the link they provide you. Go back to your regular thing. And anyway, you guys are pretty experienced with this. It's unfortunate that it happens that often. Data breaches. This is, again, it's happened with even Social Security themselves have had it. Malware, yeah, crazy links you might download. Um, Skimmers, yep, they'll clone your card. The only way there's all these there's more methods that we could list here. The only way to truly combat this is to look at your account on a fairly regular basis. And I don't mean to wait for the end of month statement. I mean mid-month, have a glance at it. And if you see your balance going up, and the credit card companies themselves are now trying to correlate things, based upon your location data or unusual activity, and they're good about it, but you got to catch it early. Mail theft. Yeah, I've had just even here I was in Eagle River, passport stolen. Um, all kinds of stuff. The public Wi-Fi, there's only so much you can do. Um, Using a VPN helps, but um, yeah, some of the data, again, most of your accounts where you have the opportunity to do some sort of multi-factor authentication is defeats a lot of these. So again, you'll get all these things where people are trying to get this code, get you to reveal a code, and some people just don't get it and they get burned. But these guys are quite creative, um, using common passwords that'll hurt, using passwords over and over again, all sorts of things that we know. But there are some authenticator apps, any sort of multi-factor, maybe biometrics as well. There's all sorts of measures that will help, but nothing, you know, eliminates the need to keep track of your charges as they're going throughout the month. Yeah, fake websites, and they will a lot of times. Again, if you didn't initiate this, message, just be very careful about responding back to anything that you've been provided. You've got to initiate it yourself. And mailboxes now have gotten better where they're not as valuable to the thieves because most people don't have as much stuff mailed to to their boxes. Now, obviously the porch pirates out there stealing the packages, that's another issue. But in terms of identity theft, most of the bills now that arrive, they typically don't have the full account numbers on them and the rest of the details. Prevention measures. Yep. Secure documents, certainly. Shred documents that you do have that you're not using. You can burn them if you want. Strong passwords, multi-factor, monitor, protect mail. There's only so much you can do. Mailboxes are typically on the street. This whole informed delivery thing, kind of a joke. It's so inconsistent. I'm signed up with one of those after my passport got stolen, and it's not quite as accurate as you would hope. Alert for phishing. If you do notice a problem, um, yeah, these steps are kind of once you call them up and you say, I think there's been some credit card fraud. Make sure you got a backup. Make sure you've got another credit card or something else because they're going to lock down that account. And typically, if you're a decent customer, ask for expedited delivery. If it's, a credit card that you're planning on using, um, they can overnight the stuff. I get credit cards sent to me all the time, and I just about always, you know, I ask for expedited delivery, and they do it, and it shows up the next day with FedEx or UPS or whoever. But yeah, they're going to want to freeze it down. Password managers can be great, but all your passwords are now in one spot, and given the data breach, I don't know. Software, firewalls. Yeah. There's a thing, especially in the crypto world, there's some tokens and there's some offline ledgers. And yeah, people with crypto, people have gotten ripped off. I mean, there's 21 million Bitcoin. Will they're not all mined yet, but it's getting pretty close. The mining it's more involved. But anyway, of all the coins that have been put out there, estimates are somewhere around a quarter of them are just lost. People were so secure about it that they actually lost the codes or misplaced them, back when they were only worth pennies. And so you can go too far the other direction, and there is no Bitcoin help desk. So crypto's a scary thing. It's a great thing. We'll talk more about it later, but yeah, there's no Bitcoin help desk you can call. If you're buying that stuff, maybe use an exchange that will provide some sort of customer service, some sort of security is useful. Opt out of offers, free. Yep, you can perhaps do that. The boys at the crime lab. I'm not sure about that. It does sound a bit like, you know, I think I did try to report something, and I think there was a government shutdown. Anyway, they never did anything about it. I reported the Wells Fargo thing. Never heard boo out of those people. So, contact the financial institution. That's good to have. What I used to do when I was traveling, especially sketchier places in the Middle East, I would kind of get the whole contents of my wallet and um, take it out and take a photo of, the cards that were in there and then the other side. Because the problem is, let's say, like you're someplace like Paris or Istanbul or someplace where they know they've got, pickpockets. I was in a metro in Madrid one time, and I mean, these guys, something weird was happening. I just knew something was going on. I grabbed for my instinctively grabbed for where I keep my wallet, and sure enough, there's a guy's hand right there grabbing it. Anyway, I've come very close to getting pickpocketed quite a few times. But anyway, if that were to happen, this whole contacting the financial institutions is quite hard when they got your wallet. They've got all those numbers, the websites and stuff. So you want to make sure those things get locked down as quickly as possible. And then a fraud alert. Yeah, the fraud alert's going to happen. So when I lived in Spain, I could go more stories, but Spain was just those people just ripped each other off like you would not believe. They'd have fake ATMs, Cajaro Automático, whatever, and you'd shove your card in there, and it'd come back with a no funciona, out of order message. I was down at Plaza del Sol. This machine was there for years. It was not a machine. It was just a card skimmer. Put your card in, you punch in your ID, your PIN, and it tells you it's out of order. If you do that as a stupid tourist, you have just given off all your details. And by the time you get to the next ATM, they had skimmed your card, they had your PIN, and they drained your account. And it just, anyway, identity theft insurance could happen. I've never had it. Um, anyway, sometimes they'll offer you some sort of credit monitoring thing. Usually, I would get some sort of alert from those monitoring things after the act has actually happened. It's nice that they were tracking it, but they were like a day or two late. I had already figured it out myself. So, report identity theft. Yep, all these things again. These are the different credit agencies. Now, again, for getting the credit report, you probably don't want to go to these guys directly because if you go to the other site, it's going to go all three of these guys together. So, TransUnion, Experian, um, TransUnion, what's the other? Equifax. Yep, the three. Managing your credit. Okay, so this kind of repeats a little bit. So we're not going to spend too much time, but I've kind of gone through the advantages of credit cards. I've talked about being a convenience user. If you pay off the bill every month, you don't pay a service charge. So that's good. Make purchase you can't afford? Yeah, sure. You can spend beyond your means. Yep, yep, yep. So you can certainly get yourself into trouble. And compound interest works, forward and reverse. So those charges will add up over time. And yeah, um, applying for a credit card, they're going to take a lot of stuff into account. And then, um, if you've ever gone to like Home Depot or something and you want to buy something on credit, they want you to establish a credit card. You type in your social, and then all of a sudden, they'll also typically ask for your annual income just as a verification item. And then they've run a credit check on you, and there you go. Income, existing debt level, and yeah, what they're offering. The big three out there, Discover's out there to a certain extent. American Express, they've got a variety of cards. Some you actually have to pay off in full. And if you're only going to have one card, I would not necessarily recommend American Express. I use my American Express almost exclusively, but there's some places that don't want to pay the 4%, so they refuse to accept it, which kind of sucks if that's all you have. So there's these other individual store cards, kind of gotten away from that. But there are certain stores, seems like Cole, or that's why I had that Gap card back in the day, because the only way to get a good deal was by having their card. Um, yep, there'll be a maximum credit. That's always waiverable. If you give them a call, if you got something big coming up, um, they'll probably waiver it over the phone. Overdraft, nice to have for your credit card. I mean, from your checking account where it rolls on your credit card. Annual fee, if there is an annual fee, um, there's different strategies when getting a credit card. If it's got an annual fee, make sure there are some perks associated with it. If there's no perks associated with it, unless it's like maybe an airline card where you're getting a free flight now and then, um, don't pay it, because get a different card, because there are ones that don't have an annual fee. And again, it's if you're just getting started out, most things will have a fee. And then for high rollers, oh no, they waive the fee. So don't fool yourself. Nobody's going to be super impressed that you've got a gold or platinum card, whatever. Not that big a deal. They don't treat you any different. The airline, you know, lounge access would be a good thing, but you probably ought to get your life reordered if you're spending much time in airline lounges. anything, anything. The glory days of travel, your business travel anyway, have long since passed. If you're spending that much time on the road, ugh, those are probably not quality minutes, hours of your life that are going away. So, but anyway, grace period. So this is how you get that convenience user. You take advantage of the grace period. Just pay off the card in full by the end of the month, and boom, no interest is charged. All sorts of different ways on how they can charge the interest rate. The one absolute thing with every credit card I've ever seen is if you take money out, you use it like an ATM card. It is not an ATM card, and they want you to use it for cash advance, because they start charging interest rate then, and then they also charge a fee, um, for the credit card use itself. So I ran into this one time where somebody got in my mailbox and they had those silly convenience checks with my bill, with my credit card bill, and they used a couple of those things. And I think they wrote a check for like $300, and some, you know, idiot merchant was whatever, they cashed it. And so I ended up with like $330 on my credit card statement. Um, And so I called them and said that this wasn't me. So anyway, what happens in that case is the merchant just has to eat those charges. The credit card company, they don't care. They're if they paid the merchant, they're taking all that money right back from them, and they gave me my $30 back, plus they removed the $300 charge as well. So now if you're gonna do, well, just don't do cash advances on credit cards unless you're in some sort of dire straits, and make sure you don't confuse it with an ATM card. You can see these rates. I mean, these are typically more than almost all cases what you're going to get on normal investments. If you're doing well in the markets, you know, yeah, well would be typically above earning 10% interest. If you've got credit card bills out there that are just, that you're paying this interest on every month, you need to, sort yourself out. You need to pay off your credit cards and then you start investing. You don't start investing when you're carrying balances every month. You can't invest that well. You're not going to get a rate of return that's going to typically outdo what the credit cards are charging. Finance charges, yep. They have different ways they calculate it, But again, matters not to me because I don't carry a balance. So there is no balance. If you do have to carry a balance, obviously make it as small as possible and don't do that again. Just get through it and use your emergency fund or do whatever. But you should not be too worried about interest rate charges on credit cards because you should be a person who doesn't pay them and just a balance. So they've got different things. You got to read the fine print on your credit card statement. Simple interest, typically things are not simple interest. Typically things are compounded, meaning if you've got a credit card bill that has, let's say you've got $1,000 on that bill and now it's up to, what would that be? Well, if you let it go each month, but if you let it go a whole year, it's not going to be just 27% more based upon that 27% rate. No, it's going to be, they will split up that 27%. They'll divide by 365 and they'll um, compound that rate daily. And anyway, it's going to be compounded. Now, when you are talking any sort of rates, to make sure you don't confuse simple interest and compound interest, they just call it APR. And that's all you're really concerned with, annual percentage rate. So if you see somebody say, oh, it's a 2% rate for something, or it's a 20% rate for a loan or something like that, it needs to say APR behind it, or it's meaningless. You don't know what they're actually implying. By law, at some point when they're making an offer to you, it needs to, for legal purposes, before you sign anything, there needs to be that interest rate stated in the annual percentage rate. Sometimes they can use some confusing simple interest or some other else as like a teaser advertisement, but there somewhere on that advertisement will be a thing saying APR and giving you the rate that you can actually compare with other rates. Interest, yeah, the higher interest rate, the higher the payments. Um, yep, and if you stretch it out, it's gonna get expensive. So this isn't so good. They're charged using simple interest. So, but the point is that if you let things go, if you use my example where you bought something with a credit card because it was a good deal, but then you don't pay the bill, it's not going to be such a good deal by the time you're done. And that's what they're showing here too. You know, um, if you pay this amount over 4 years, it's going to get quite expensive as the interest rates go up. Here's that principal. Here's this, you know, what is it, $2,000 you borrowed, and by the time you're done, it was over 8,000. Statements. The one thing I always go straight to is the finance charge. I want to make sure that's zero, and then I start going back and make sure all the other things are in accordance. Obviously, there shouldn't be any cash advances on there. There's a whole string of purchases, obviously. Previous balance should be zero. New balance minimum payment. Yeah. Scrutinize your statement for errors. The thing I do a lot of times too is if there is going to be a problem in paying the balance off in full or something, or you're waiting on a check or something like that, pay a portion of it so you don't get hit with a late payment, and then the day or two later, pay off the rest. You can make multiple payments in a month. So if you get yourself in a bind, you know, get it paid off. Don't wait till they send you another bill. You can pay it as soon as you get the money, and that interest rate will stop. Scrutinize statements for errors, dispute them. Yep, and get a hold of them. Now, typically, I've always catch these things when they're typically when they're still in the pending category, and you'll try and dispute it, and it says, well, you can't dispute it yet because it hasn't been posted. And if it's like a deposit or something for, say a rental car or a hotel where they put a big incidentals charge on there, you'll see that just sort of disappear after a few days. It'll go from pending to gone. But if it actually gets posted, then you need to get on it and dispute it if it's not valid. Card Act. There's all sorts of rights that apply to credit cards that a lot of times will give you more legal protection. And also, things like I mentioned a lecture or two before where there was an incident with the rental car, but because I used the credit card, um, there was some protection. I was very happy to know I had the protection. I would have been even happier to have not had those tense moments, not being sure whether it was covered or not. But now that I know it is covered, I'm even, better with it. So anyway, yeah, there's certain legal requirements. Not all these apply to debit cards. So debit cards and credit cards are not, from a legal standpoint, not necessarily interchangeable. Yep. So you got to be able to cover the bill, tight credit limit if that's what's required, pay bills before investing money. Certainly. Credit card debt before paying off other debt. Yeah. So there are some finance gurus, advice people. They have different methods for how to pay off your bills. I think anything other than paying off the highest interest rate loans first is incorrect. I mean, you need to pay off the interest rate that's, the highest. Now, if you've gotten yourself into trouble and you got some, 15, 20 grand on the credit card and there's no way you're going to get this thing paid in 6 months or something, don't just suck it up and keep paying that. Call the credit card company, say, I got a problem here. I got myself in over my head. I need perhaps a debt consolidation loan. I need something else. And they'll go from that secure to non-secure. They'll put you on some sort of installments. But the important thing is they'll get that interest rate down. Because if you're paying 20 some percent interest, you're likely going to be, you know, taking on water. You're likely going to be taking on more debt and you're trying to pay it off, but you're not going to get there. You need to get the thing restructured. They may, you know, close your credit card. They're not going to get rid of that balance, but they may, you can work with them. At least if you've got a dialogue going with them, they like that. Um, what they don't like is, well, even worse is going to one of these credit reports repair services and somebody else calls on your behalf and says, yeah, we're basically going to stiff you. Um, yeah, the credit card companies, they're businessmen. They're not going to allow that to happen. The These guys who say, oh, you can get out from under it, you could potentially declare bankruptcy, but that's a whole different story. So anyway, expected cash flows, inflows. Yep. How much credit? Keep in mind you got to pay it off. You might not get your savings goal if you got too much credit card debt out there. And if you do all this, the only real example, the only method is going to be reduce those everyday expenses. Borrowing money from people, working harder, doing this, selling their assets. Those are all short run things that might work once or twice, but you basically need to get your spending under control. If you do bankruptcy, it's going to leave a mark. You do Chapter 7. What you've done in this case is you've gone to the judge and you've gone to bankruptcy court and you're saying, yeah, I'm really bad with money and I need you to take over my finances because you have empowered them. The court is going to maybe discharge some of these debts, get rid of some of these debts. But guess what? They're not discharging student loans. When you owe the government money, oh no, they're not going to take a cut. They will not discharge certain things, and student loans is one of them. But anyway, um, some of your other debts, they'll say, okay, we're gonna write that off. But in order to do so, in order for you to be under the protection of the court, which you're doing in Chapter 7, you basically have turned over all your finances and all your personal uh, financial decisions to the court. And you can have a whole bunch of stuff, and they'll make you provide a list of what you have on hand. And they're saying, yeah, we're selling that. You got to get rid of that. You're getting rid of this. But I really want that. Well, no, you you're not the one calling the shots anymore. You've turned that over to the court. The other thing is you can go to court and and I saw a couple doctors do this where they made a horrible decision. They bought this condo and it was when the real estate scare happened, whenever that was, 2007ish, and they lost it. They spent like 1.2 million on this penthouse thing, and it was, I think they got out from under it at like 200,000. Then they declared bankruptcy. They were both doctors, and they went to court and declared bankruptcy, and the court said no, no, you're able body, you can work, and you're going to pay off the creditors, and we're gonna, you're gonna be under our tutelage here for whatever number of years, and you are gonna pay these people off. And here's your program. And anyway, again, you've gone to the court and they've taken control. Also, your credit, it is going to stick with you. If you look at a credit report, if somebody's had a bankruptcy, there's going to be a big gap where they didn't have any credit. And then when they tried to reestablish credit, the credit card, the credit agencies they know where bankruptcies happen, even if there's nothing in there. Well, there will be that statement in there, but also that big gap with no accounts. Everybody knows what's going on, and your ability to get credit is going to be diminished. And if you can't get it, it's going to get incredibly expensive. So anyway, but if you can work with credit, it works great. So retrieve your credit report, don't turn it in, and then that problem, I'll put a thing out there. Okay, so let me go back to the FTC.gov. Um, I don't want to go to the individual ones. I want to go to the so let me first go like this. If you just go in there blindly and you go, you are going to get a whole bunch of stuff. Annual credit report, the US Gov, that's the good one we're trying to get to. But these other ones, freecreditreport.com, other stuff, credit.com, these are all commercial sites, and you're going to be signing up for, some sort of service probably. If I just did this, I'm not saying to do this, but anyway, you start typing in all your details, and you are probably going to get redirected to one of their folks, your credit repair people, credit repair essentials. Anyway, I would be very leery about that. So what we're going to do instead is we're going to just type this ftc.gov, and we're going to go at it that way. And we're going to get our credit report. I probably skipped by. I'm probably driving all of you nuts going, it's there. It's right there. Oh, grant your free credit report. Yep, I scanned right by it. And here you go. Here's the thing about credit reports, little information. Now you're going to get directed. How do I get the report? You're going to go to this site, but this is the site by all three of them. So it'll give you some, yeah, advisory. You're leaving the government site, but you're going on the direction they requested. And here it is. Request your free credit report and pick the request. Anyway, you just step through it and get it done. But now you're typing in all sorts of sensitive information. So that's why you don't want to do it on a site that you don't know a little bit about. Just from the information you're typing in here, typing in your social and your birthday and your name, your address, that would be quite valuable to somebody. So anyway, that's how you do it. Um, and that's about it for this evening.